Welcome to Simple Career, a channel which intends to help you get hired, provide valuable career tips by bringing professionals from different industries, and provide you with basic investment knowledge to shape your career. In one of my previous videos, we discussed different websites where you can learn how to trade or do virtual trading. And quite a lot of you reached out requesting for basic strategies which you can use for day trading as a beginner. So if you haven't seen that video, I'll put the link to that in the description below. So in today's video, we'll talk about one simple strategy which a lot of you can practice, test it, and then implement it while day trading. So as a beginner, you will be able to understand chart patterns slightly better. One thing which you need to understand when you're trading is that never buy a certain company's stock purely on others' recommendation. If you're getting a tip or about a stock or a company, that's okay, but make sure you do your own research before buying it. Make sure you understand the chart patterns. So as a day trader, there are quite a lot of different indicators which you can use. So for intraday trading, there are three indicators which I personally use. I'll be covering those in this particular video. So these three indicators are MACD or MACD, 200 EMA, and RSI. MACD is moving average, convergence, and divergence indicator. So it's a trend following momentum indicator, which actually fluctuates above and below zero. So in this case, you have two lines and one histogram. So the blue line is the MACD line and the red or the orange line is the signal line. And then you have the histogram which shows you how much buy and sell is happening. Now this is an MACD chart. As you can see, we have the MACD line here and we have the signal line which is the red line. Now whenever the MACD line crosses the signal line from the top, like here, it shows a downward momentum and you can see people are selling more. So these red histogram bars, these indicate that people are now selling. So for example, let's look at another case. The MACD line crosses the red line from the top, like here, and you can see selling happening. Similarly, you can see over here as well. And you can see, let's take another example here. So wherever you see MACD line crossing the red line, which is a signal line from the top, it indicates that people are now selling the stock. And whenever the MACD line crosses the signal line from bottom, it indicates that people are now buying. Similarly, if you can see here, it shows that people are now buying the stock. Similarly, you can look here and you can see here as well that whenever the MACD line is crossing from the down, buying increases. So it's one of the signals which helps you understand whether you should take a position or not. Now, moving average is very simple. It shows you the average closing price. So if you want to take 10 days moving average, for example, this indicator will add the closing price of 10 days and then divide it by 10. So exponential moving average is quite similar, but instead of giving more weightage to the past, like your simple moving average, it gives more importance to the present prices. So it's a weighted moving average and it is used to understand the direction of the trend. So we will be using a 200-day moving average and this will give you a better idea about the current trend of the company. Now this blue line, this indicates a 200-day EMA. Now whenever the stock price is below the 200-day EMA, it shows a downward trend. As you can see, the stock price is going downwards. Similarly, in this case, you can see that the stock price is continuously fluctuating above and below the 200-day EMA line. So this is a sideways trend. And finally, as you can see here, in case of an upward trend, the stock price continuously stays above the 200-day EMA. So it stays continuously above, goes a little bit down and then comes back above the 200-day EMA. So in this case, this is an upward trend. Now, one of the close things which you need to follow is always follow the direction of the trend. Trade in that direction. So if the market is uptrend, you want to avoid shorting, even if you think there is a good opportunity. Same way, if the market is downtrend, you want to avoid buying unless your intent is to swing trade or long term trade where you're planning to hold the stock for a couple of days. But if you're planning of intraday, or maybe if you're planning of holding a stock overnight, always follow the direction of the trend as it eliminates the risk and increases your probability to win. So I just want to repeat it. As a beginner, always trade in the direction of the trend. If the market is uptrend, look for buying opportunities. And in case the market is downtrend, look for selling or for shorting opportunities. And the third indicator is RSI. RSI helps you understand how overbought or oversold a particular stock is. So the default option is always 70% and 30%. So in RSI, we have the value between 0 and 100. So anything above 70%, the market is said to be overbought. And anything below 30%, the market is said to be oversold. So now, since you have understood the different indicators, let's understand how they can be used in charts. Now this is an example of sideways trend. As you can see, the stock continuously fluctuates above and below the EMA line. So in this case, we want to draw a support and resistance. So support would be that particular place where the stock continuously bounces back up. So as you can see, the stock comes here, gets rejected, goes up, again comes here, gets the same support, goes up, and it continuously goes in the same area. So we want to draw a support line here. So this is the support, and as you can see, the stock continuously gets rejected here, here, here. At these points, the stock continuously gets rejected downwards. So we want to draw a resistance there. We want to look for both buying and for shorting opportunity. Now over here, for example, when the stock is near the support line, we look at the RSI. The RSI indicates that the RSI is quite less at 37.02. That means it is being towards the oversold. We have the MACD line crossing the signal line, a small window here, and we have a buying opportunity around this particular place. Similarly, we have the MACD crossing the signal line here. We have the RSI indicating that it is almost towards the oversold area is at 40, and we have this particular opportunity. Now you want to ensure that you are, as a beginner, trading between the support and resistance. Your ideal target should be anywhere between about 4 to 5%. Once the stock comes near the resistance line, we know that it is being overbought. The RSI indicates over here. So we look for a position where the MACD line is crossing the signal line from the top. And this is the opportunity available for taking a short selling opportunity. Then we have another opportunity. As you can see, the RSI is almost towards oversold. We have this particular opportunity. Directly above, we can see the MACD line crossing the signal line here, and we have a small buying opportunity here. Similarly, again, we have another buying opportunity here. We have the MACD crossing the signal line, which gives us this particular opportunity. So we have another opportunity at this particular area. As you can see, the RSI is on the lower side. We have the MACD crossing the signal line from the bottom, and we have this particular opportunity. Okay. Now once the stock reaches near the resistance line, we can see from the RSI that it is being overbought. We have the MACD line crossing the signal line over here, and this indicates that we have another opportunity here. Now this is an example of uptrend. Now when it is uptrend, we are looking only for buying opportunities. We want to avoid any short selling opportunity. So in this case, we have an opportunity here where the MACD line crosses the signal line from bottom. The RSI indicates that it is towards being oversold. Directly above is where we take a position. So we have this opening. Again, the RSI comes near the oversold area. So we have an opportunity here. The MACD line crosses the signal line from bottom, and we have this window. Now again, the RSI over here indicates that it is being oversold. We have the MACD line crossing the signal line, and we have a small position here. And then again, over here, it can be seen that the RSI is towards being oversold. We have the MACD crossing the signal line from the bottom, and directly above is the opportunity which we have. Now this is an example of downward trend. As you can see, the stock continuously fluctuates below the EMA line. So when it is a downward trend, we are looking only for short selling opportunities. We want to avoid any buying opportunity. So in this case, as you can see, the RSI is almost towards the higher side where it is indicating that it is being overbought. We have the MACD line crossing the signal line from the top here, and this directly up is giving you the window. We have this window for short selling. Again, we want to avoid any buying opportunity. So even though this looks like a buying opportunity, we want to avoid this because the stock is in a downward trend. Now this is another opportunity. As you can see, the MACD line crosses the signal line from the top. We have the RSI, which is at 57, goes downwards, and we have this particular opportunity here. We have another opportunity. As you can see, the RSI is on the higher side. So the RSI indicates that it is being overbought. We have the MACD line crossing the signal line from the top, and we have this particular opportunity here. We want to avoid any buying opportunity because it is in a downward trend. We have another opportunity here. As you can see, the RSI is at 73, indicating that it is being overbought. We have the MACD line crossing the signal line from the top, and we have this particular opportunity here. Now, these indicators are not 100%. In trading, you can't win 100% of time. There will be times when it's a false signal, and for that reason, you need to have a stop loss. Now, one of the tips to increase your chances or increase your probability is that you always need to have a look at the Nifty chart. See which side is Nifty moving. If Nifty is going upwards, you want to look for those stocks or companies which are going with the Nifty in the upward direction. If the Nifty is going up and you are trading in a stock which is in the downward direction, then your probability is quite low because if the Nifty is going up, generally the companies who are below 200 EMA or having a downtrend will have a lesser drop and will eventually change its trend to a sideways trend. So the chances of winning 100% of the time is not possible. So it's about minimizing your risk and increasing your probability to win the trade. So I do hope you have understood the basic trading strategies. Make sure before you try implementing any of these strategies with your own money, you do practice it. Try doing virtual trading or paper trading to understand how it works so that you are able to implement it faster. So with that said, you guys, thank you for watching this. If you're interested in watching more of such basic investing videos or would want to watch career related interviews with professionals, make sure you hit the like button and subscribe. Also, you can click on the next video here, and this video tells you about leadership roles, how you can develop your leadership skills and manage a team more effectively. So with that said, see you all in the next video.